is Les Wilkinson from Frank Reynolds Company with our January 2013 stock market and economic update. Please make sure to review the required disclosure statements below. After a tough December, markets were on a bull run for most of January, with the Dow achieving its strongest January performance since 1994 and hitting 14,000 for the first time since stock markets crashed in 2007. For the month, the S&P gained 5%, the Dow gained 5.8%, and the NASDAQ gained 4%. After a lot of debate, lawmakers were finally able to come to an agreement to avert the fiscal cliff on January the 2nd. While we're happy that the fiscal cliff is no longer hanging over our heads, we're disappointed that lawmakers couldn't come to terms over spending. Instead, by temporarily suspending the federal debt ceiling, they postponed a critical element of the debate. Feel free to contact our office if you would like a copy of the report on this topic. January kicked off the earnings seasons with the release of fourth quarter earnings reports from major companies. So far, the trend has been just good enough. Not great, but not awful. Total earnings for the S&P 500 companies that have already reported are up nearly 2% over the third quarter, meaning that companies are doing better than last year. Even better, executives are upbeat about future earnings and business conditions, meaning that we may see improved performance in the first quarter. The last week of January saw a flood of economic data. The United States gross domestic product contracted in the fourth quarter by 0.1%. While a lot of people were pretty worried, economists believe that the number is artificially low because of some unusual factors, including lower defense spending. Increases in consumer spending, construction, and business investment show us that the economy is still on a moderate growth path. January's final consumer sentiment number beat expectations as consumers regained confidence lost during December's fiscal cliff debate, but people are still worried about the new tax increases. The latest employment numbers show that unemployment rate ticked up to 7.9%. However, economists are revising their 2012 employment numbers as more jobs were created than they originally thought. Although we're pleased with the January's market rally, the ups and downs are a normal part of a healthy market, so we won't be surprised to see a retreat in the near future. We're also hoping that lawmakers start discussing their ideas for reining in government spending. As always, we'll keep you updated. On Thursday, February 21st, we will be having a chocolate tasting. And once again, this is Les Wilkinson with Frank Reynolds Company with the January 2013 stock market and economic update. I hope you found this interesting and informative. If you have any questions about what you've heard in this update, or you would like to discuss your personal financial situation, please give us a call at 386-248-2121, and we'd be happy to talk with you.